While the interest rate fell so fast, now you can afford more homes in December 2023.
Yeah, we want to quickly make this video because the world has shifted in 2 days. I don't know if you've noticed that your 401ks are up. Well, basically, let's talk about what happened because it also affects your purchasing power of home buying, which is amazing. Now, the Federal Reserve came out with an announcement and basically said that next year they're going to drop the interest rate 3 times. Now, the Fed fund rate currently at the filming of this video is 5.5. Now, because the markets heard this, they realized that they could invest in real estate again, which is a great thing, which is why markets went everywhere. Your 401ks are up, stocks are up, which is great. Now, let's talk about it though, what's happened. And basically, we were talking about over 7%. Now it has decreased down to 6.62, which is the lowest it's been since May of 2022 when they were still upping those interest rates. Exactly. Why? It's because the market has realized that real estate is something that people are going to invest in again or buy. And so the market has shifted for everything.
Therefore, there are changes, as we said, based on the Federal Reserve, and also, we wanted to say the impact, how it impacted on home buyers.
Now, right, and we're going to do direct numbers, but I think first we should do our
introduction.
So let's hit it. Hi, it's Alan Victoria. Welcome to our channel podcast.
And if this is your first time in our podcast and YouTube channel, make sure you subscribe and get notified.
As we call us all the time at 252-327-3357. We love talking to you. Don't be shy. Also, don't forget our buyer's guide and seller's guide in the description below. Whew. Now let's talk about calculations.
Exactly. Therefore, we're going to tell you some calculation, and of course, you don't need to pay down payment 20%, but
these are just for math, so you can compare.
You can compare. Basically, based on the calculation, if we're talking about in our area, Pitt County, North Carolina, you purchase a home for $300,000 and you have that down payment of 20%, which is again for FHA, you need 3.5% down payment.
Right, and USDA is 0, but the reason we use the 20% is that we're not calculating PMI, and that will change numbers a little bit. We're just showing you how the interest rates shift at this point.
Therefore, previous rate, as my wife said, the APR with
conventional was almost 8%. It was 8.03.
It was 8.03%, and at the time of this video, it was 6.62. No?
Right. So we just want to show you how much purchasing power changes at this point. So with that 20% on $300,000, your monthly payment was about $2,064.
Exactly.
With that one drop, the payment dropped to $1,833, which is like almost $200.
No, more than $200.
More than $200.
$230
and
basically.
That entire payment is all interest. It has nothing to do with the principal of your house and how much the principal is paying. It literally is 100% interest on that house. So your purchasing power changed in a day.
And the reason that we said over and over 20% because we wanted to eliminate basically mortgage insurance.
Right, but even if you're taking a 3.5% down, your purchasing power still increased by that 12% that I was just talking about. So if you in 1 day or 2 days, your how much home you could purchase changed 12%.
Exactly. Therefore, this interest rate, it helps to purchase up the power. Now, we look at the long-term financial implication, no? Mm-hmm. And how much basically total you saving on the interest, how much you're saving.
So you're now, from that 1 day, that $200 change, you're going to save about, on 30 years of a mortgage, about $120,000 completely on interest that you're not having to pay, which is, of course, a great thing.
Exactly. And then the broader economic impact that you can say, what is the broader economic impact in the housing market?
People are still buying homes despite what the news says because people always need a place to live. You're always going to need a place. If you're in a situation to where you need a home, you're going to get a home. It's just that's how it works. However, now with that, consumer spending we know has increased because of inflation, and inflation has been the whole focus of like 2023. Now that the government has said we're going to drop interest rates because we're less worried about inflation, it means that consumer spending will be projected to go up. housing prices and housing market will go faster, which means if you were considering a home, I would highly consider getting the home, even if it's 6 months down the line. I would consider putting down with new construction. I would consider getting that locked in as yours, because the market's going to shift, and it's about to shift and go faster again.
Exactly. And then what about the future rate cuts that you were talking about?
Also, the federal government has not said how much they're going to up it or down it right anymore. They just said they're going to cut it 3 times. And if we're currently at 5.5 for the Fed fund rate, which was affecting the interest rates, if they drop it 3 times and they just drop it a little bit, hopefully we get to an interest rate of at least 5%. I know everybody loves 3%, but 5% is a healthy interest rate that has been in the market for 20 something decades. So it's really kind of that historic decade long.
2 decades. No?
2 decades worth of data is about 5%. So we do have that norm. So even if we just get back to norm, more people will be buying houses again.
Therefore, definitely the power of the purchase for all the home buyers is going to change tremendously.
Now, what happened to that Dow Jones and stocks yesterday?
Dow Jones stocks, it went up. No?
Yeah, they went up significantly, all because the Federal Reserve made this one announcement.
Therefore, now what we are talking about, the inflation and what is the economic indicators.
Okay, so the producer price index and other economic indicators are saying that inflation might still be an issue, but it might not be as well. So discussion on easing off on inflation and going back to a norm is really what has taken over the stock market, and why all of the stocks went up, why interest rates went down, because the Fed hasn't actually changed the number yet. They just said they were going to change the number.
I think
when they change the number, it will go down even more.
I think in the general scenario, Federal Reserve they monitor everything and they see how all these factors affect the basically inflation, and see if they can really cut that rate.
Because if they are done fighting inflation and we are back to people can just buy homes again, that's going to affect your purchasing power and how much you can afford and the house in which you live. So we're happy to talk to you about getting a house, locking it in now before prices go up. We're super excited about that. So don't forget, call me.
And definitely, we're gonna update you on the next meeting that FOMC that they have for Reserve Committee, that what is going to be the trajectory and what is going to be the policy for the interest rate cut. And thank you for calling us at 252-327-3357. Love to hear from you and your comments, and see you in the next podcast and video.